Hi, this is Farzan Ghadially, your finance expert. Today, we are going to look at how to invest in a bear market. India indeed is in a bear market. The stock market has corrected to a large extent. A lot of portfolios of retail investors, high net worth individual investors have corrected to a very, very large extent. What should really investors do? Should they lose hope or what should they really look at? Well, let's to understand what a bear market is. In this kind of market, we are going to really see a correction. Is this the first bear market that we've really witnessed? Not really. But what is different in this bear market is a lot of retail investors that started investing from April 2020 had a one-way trending market. The markets kept going up and up and up. So they made a lot of money during that period. They had never experienced a real bear market. So a large proportion of small and retail investors, almost 2 to 3 crores investors that opened demat accounts, started investing in the equity market directly, put in small amounts of money, 40, 50, 60,000 rupees, are really facing the brunt of this bear market and are panicking. Well, if you look at the history of bear markets, we really had a first bear market in 1929, followed by about 2000. 2008 was the last bear market that we really witnessed. What is different is in each of these bear markets, if you really look at the 2008 collapse that really happened of the financial system, central banks around the world and Federal Reserve came to the rescue of markets. Interest rates were lowered, quantitative easing happened, lot of liquidity was really pumped into the markets. Today, what is the problem and how is it different? If we really look at it world over, there is one biggest concern that is really there, that is inflation. Price rise. That's a concern every government really has. If you look at the US markets, inflation is at 4-decade high. Hence, what did the Federal Reserve, the Reserve Bank of India of USA do? They increased the rates. In fact, as latest as 15th of June 2022, they have increased the rates by 75 basis points and anticipated that probably in July, they would again increase it by 50 to 75 basis points, followed by all the central banks around the world, including the RBI. So when interest rates really increase, what happens is there's a flight of capital that will happen from the equity markets to the fixed income or the debt market. That is what exactly is happening. A lot of investors and a lot of critics of the Indian market say foreign portfolio investors or foreign investors are really exiting India. Yes, to a large extent, there has been a lot of churn and there has been a lot of exit as far as FPI money in India is concerned. But you have to look at it as a global perspective. If you look at the US market, the correction has been brutal. It has been a correction of almost 30-35%. In contrast, the Indian market is corrected by only 15-20%. The selling of the FPI is not India specific. It is emerging market specific. So when foreign portfolio investors are exiting emerging markets, they will exit markets like India. On a global perspective, the market capitalization of the Indian market is hardly 2.5 to 3% compared to the global market capitalization of the world. Hence, it may not make such a real big difference that is really there. But the small and retail investors that have been the backbone of this market since April 2020 are really panicking. They don't know what to do because what has happened is the portfolio has come down 15%, 20%, 30%, and in some cases even more. So the first thing real retail investors should really do is don't panic and don't exit the market. If you look at bear markets, you could clearly distinctively have 4 phases in a bear market. The first phase in a bear market would be a thing wherein there would be high volatility, few investors exit and corrections will happen. Second is the most unpleasant phase wherein you would see a major sell-off in the markets. People panic, investors panic, take out capital, and you would really see panic and really prices drop. The third phase is where there is price drop as far as stocks are concerned, but certain investors or speculators start coming back to the market saying that, listen, probably this was the bottom of the market and we will do bottom fishing. We will get some value out of it. The fourth phase is the phase wherein value investors, new investors come in and start off another bull market. So what phase in the Indian bear market we really are? If you look at it, we are probably in the second phase. Will this bear market end in a couple of days, couple of weeks, or couple of months? Well, no one really exactly has that answer. But what is important is, let's look at it this way. From 2008 to almost 2020, we had a 10 to 12 year bull market where stocks have done exceptionally well. No one really knows how long this bear market would really last. What is important, the bull market lasted for 10 to 12 years. If you go back at history and really look at history, look at the Dow. From 1967 to 1982, we were in a bear market. Hence, investors should not feel very optimistic and shouldn't feel that this is just a matter of a couple of weeks or months. This bear market could be a market that could last for a couple of months or a couple of years. Indian markets are better poised than most markets in the world. If you look at the Indian stock market, we've not gone up as much as the US stock market has. Hence, we've not corrected as badly as the US market as well. Hence, probably the best market in the equity universe in the emerging space would indeed be India, because probably you would have a lesser correction compared to other emerging markets that is really there. Hence, investors should be cautious. How should investors approach this bear market? Gone are those days where you could just probably pick up a stock and wait and it would go up. It will not happen in a bear market. You will have to be very cautious. What is important is, do not panic. If you've taken a stock and you believe in the company, even if there is a correction of 15-20%, stay invested. Good quality companies will come back. Second most important is, never ever catch a falling knife. If you feel a stock is corrected 70%, 80%, a lot of people on the street will say, correction is overdone. Hence, I will invest in this stock. Always invest in strength. When I say invest in strength, is invest in stocks that have shown strength, that have corrected the least in this bear market. Because in a bear market, it's like a tide against you. The survival of the fittest will take place. Hence, please go with the winners, not with the losers. Because if a stock is corrected 50-60%, there is no reason why it cannot correct probably another 20-30%. So be very careful of the kind of stock selection that you have. Most important, have a proper asset allocation. Equities is an asset class to beat inflation, but in a bear market, you should really have asset allocation even in the fixed income. So have a proper asset allocation that is really there. And most important, keep faith in the Indian growth story. The Indian growth story will continue, will do well. We will pass through a bear market. Probably will be the most outstanding market as far as emerging markets or world over is concerned. But correction will happen. That's extremely important. And in the long run, if you really want to create wealth, you have to look at equity as an asset class. So it's extremely important to stay invested in good quality names. Hence, for all our viewers, be invested in the Indian market. Don't lose hope. Don't panic. Also, please remember, in a bear market, you will find days in which the market has rallied and gone up 500 points, 1,000 points for a few days, probably for a couple of weeks. Doesn't mean that the worry is all over. Doesn't mean the bear market is really over. In a bear market, you can have very, very sharp corrections as well as very sharp rallies. Hence, over a period of time, conserve capital, be there is something that is extremely important. So till we see you next, conserve your capital, be invested, believe in the India growth story. The bear market will come, the bear market will pass, but don't be over optimistic, and please invest in quality names. Thank you so much.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.